I'm Bob O'Brien, the head instructor with the courses. Today's blog is why the banks are getting healthier. Now, a lot of first of all, commercial real estate is still a really big concern, but in another sort of sense, if you look back 6 months ago, this was just something that was really put on the back burner of the worry list. So it really depends upon how you want to look at it, and these things can be spun any way you want. But I personally see it as a positive because of the fact I don't see a lot more negatives. When we were talking about commercial real estate 6 months ago, it was just like, oh, just one more negative on top of everything. And of course, that's bad for the regional banks. Now, if the commercial real estate market isn't as bad as some people think, that's going to be good for the regional banks. Also, in terms of the larger banks, your Citigroup, your JP Morgan, your Bank of America, they've all done very, very well. Actually, as of today, they're not doing too well in terms of the stocks. But these banks are getting healthier. And let's just go through why they are getting healthier.
Be certain to check out the written blog at www.mywealth.com/blog. And also be certain to do your own research and analysis. This is just something that I think is a good trade right now. Okay, so a couple of things that banks got going for it. Real estate, the home builder stocks have really rallied as of recently. And of course, generally what's good for real estate is good for the banks. And as foreclosures stabilize and become less and less of a problem, the banks do become more attractive. Okay, the consumer, there's been a lot written about the consumer, and the consumer is not in great shape. But nevertheless, the consumer is still consuming. They're still putting things on their credit cards. They're still buying things. There's still 90% of the workforce that is working, paying their mortgage, regardless of whether they're underwater or not. Okay, and then, of course, the yield curve, which would be the spread between what the banks are actually paying out on savings account and, of course, what they're receiving on mortgages and, of course, credit cards. And there's still a big spread, and it doesn't look like Bernanke is going to change or raise interest rates anytime in the near future. Then, of course, you have the government backstop. Essentially, the government, if they wanted these bigger banks to fail, they would have failed already or let them have failed. So, essentially, in that regard, they have endless resources. And, of course, with their stocks going up now, they have more access to capital as well. These are the type of things we like to go through in our courses. So, don't wait. Get educated. Take control of your investing. Get to www.mywealth.com.
Things are definitely getting better in the economy. And sure, there's a possibility there may be a double-dip recession, but essentially we haven't come out of the recession that we're in right now. So that's definitely a good thing for banks, for stocks in general. A lot of people are in denial. There's a lot of people out there that are in denial about this economy. And there's still a lot of things. This was a very, very serious recession, almost depression, serious financial crisis. But things are definitely looking better. Inflation is definitely a concern, but I think there's going to be growth in the third and fourth quarter. We went from a first quarter where we had about -6% growth to -1. So there's a real possibility we're going to see a positive number in the third and fourth quarter of this year. Thanks for being with me today. Make certain that you check out our courses. These are the type of things we go through. They're very affordable. If a lot of what I said today doesn't make a lot of sense, definitely get in our Investing 101 course. It's a very, very powerful course. You'll really learn to take control of your investing. So if you're not certain where to start, that's a great place. We also have a currency course and a stock trading course and, of course, an ETF trading course. So they're very, very affordable. The money that you pay for these courses will come back, I assure you, thousandfold. So definitely check those out and have a great day.